evening and a warm welcome to Personal Finance. I'm Virath Juggai. For many people, talking or thinking about life insurance can be a daunting task, with the issue for some being that there is not a clear understanding of why cover is needed and just how much one needs to contribute. Virath Juggai, risk specialist from Gradidge Mahura Investments, joins me now for more to demystify everything that is life insurance. Good to have you with us this evening.
Thank you, Google.
Let's get into life insurance, Virath. What is it exactly, and why is this product maybe needed?
Sure. Google, life insurance is a contract between the individual and the company that they're purchasing from. So for a given premium, a certain amount of life cover is going to be paid out on the happening of a certain event. And this event, in the case of life insurance, is death or the passing on of the life insured. You also get cover like disability and severe illness. You get income protection cover, but essentially they are all contracts that one has with the insurer.
To get a clear understanding of all these contracts, I know sometimes they bundle them all together. You can actually take these covers out in isolation. Is the fundamental agreement that I take out money and or a cover, basically, I pay the service provider, and upon my death, there's a significant payout that either gets paid out towards my debts or to my dependents? Yes.
So that would be the broad perspective of how it actually operates, but there is a process of underwriting, there is a process of establishing how much cover one needs, and then based on an analysis, one would then make the application to the life insurer. The life insurer will then evaluate, look at the medical questions, perform certain medical tests, and then make the offer to you to say, yes, Google, we are happy to proceed. For this amount of premium, you are going to get this amount of cover.
I'd like us to elaborate even further on what you've just mentioned, the analysis. Maybe
yes.
That's the correct starting point, because
yes.
so often people go out there, you request a quote or you speak to a financial services provider and they give you one specific product which
yes.
you actually think is the best fit for you. Is that always the correct answer?
So, yes, the analysis should be step one of the taking of life insurance or any type of insurance product. And the analysis starts off by drawing what we call a personal balance sheet. It is important for you to know what are your assets, what are your liabilities. And then we look at what are your objectives. How many family members do you have? Do you have responsibility to take care of someone should you die? Do you have enough cover in place should something happen to you and you aren't able to go to work? So one would consider things like income protection. This analysis is then the starting point of choosing the correct product for you. It's crucial that one establishes correctly what your responsibilities are, and then so I'm being very broad here, and then take the step forward. It is important that the analysis is done properly by what we call a certified financial planner, and that the individual, that you understand what the process is. There are issues to deal with like executors' fees. There is a state duty that's payable. And these all make up the analysis and then the eventual product.
I want us to get into medical examinations, which you mentioned, because different life insurances obviously have different policies and prerequisites that they abide to. These
sure.
medical tests and exams, why are they often necessary at times?
So obviously you'll understand that for an insurer to take you onto their books, they need to ascertain what your current condition is, and it then helps them in how they are going to price the product for you. So typically one would get a quotation and complete an application form, answer a range of medical questions, which are then presented to the underwriter.
The typical questions, maybe if you can highlight some of those for us.
So what is your family history? For example, you know, how many family members have had issues with things like diabetes or high blood pressure or strokes. Other questions relating to one's own personal levels of cholesterol, and a range of medical history tests Well, basically, yes. Also important to look at what the individual's medical history is. And this is very crucial that you disclose and are completely transparent about, because should you not make all the necessary disclosures, the underwriter is somebody that hasn't met you. And they are expected to make a decision to offer you a certain amount of life cover. If they don't have all the facts in front of them, they aren't able to make a fair decision. And
tell us about a worst case scenario. I've come from a family where both my grandmothers suffer from severe arthritis and have other problems with regard to high blood pressure. If I don't disclose such information, which could, have severe implications on my life insurance cover,
correct.
What's the worst case scenario that can happen?
So
lack of payout, maybe?
Yes. An insurer is well within their rights to what we call repudiate a claim from the insured if it is found that they withheld certain information that was material to the decision that was made to grant them cover. And yes, it is very possible. It's something that we call non-disclosure, and it's possible that the insurer may not pay out the claim.
In that particular case, after all these years of contributions and there's a lack of a payout, what is the person who is insured actually left to do?
Well, look, you have the option to possibly approach the Ombud, but if it is proven that there was material non-disclosure on the part of the insured, then sadly your choices are none. And you possibly sit with a situation where you've paid premiums and you are going to not have the benefit of the cover being paid out.
Harsh realities. And maybe that also brings us to the terms and conditions that a lot of consumers maybe fail to read because the fine print is a bit too small for us to read, and we're often in a hurry when we sign those pages. So you just agree and you let them go. But the particular terms and conditions that one needs to look out for? Yes.
So I find this quite often, that people are in such a hurry, and so it's important. Take the time to go through all the questions with your financial planner. They would usually be involved in the process of completing an application form. Ask questions. You're well within your right to be absolutely clear. Make all disclosures. Rather disclose and possibly pay a higher premium if there's going to be some type of health loading on your policy, but know then that you are covered. As opposed to withholding and then sitting with a disaster later in life.
Tell us about the premiums, because obviously this raises the question how much cover is actually enough, and you already went into the calculations with regard to your risk profile and full disclosure with regard to any particular ailments that you might be open to having. But how much cover is enough, and how often should you review your premiums? Do they automatically get increased as years go by?
Sure. So let's look at firstly how much cover is enough, and I'm going to go back here to the analysis. Your financial planner should take you through a proper full financial needs analysis and establish exactly how much cover is needed. So does Gugu need to provide for her family? Is it 20,000 rands a month? Should she not be here anymore? Based on that, I can now go put in the information, look at your assets, look at your liabilities, look at what debt needs to be settled immediately, and then look at, well, how much does Gugu need to provide to support her family? And then we make a decision on the amount of cover. Financial planners usually have certain tools at their disposal that they use that are reasonably accurate, where one can forecast inflation and sort of possible changes in the future to certain issues in the person's life. And then they can then say to you, well, this is the exact amount of cover you should have in place to take care of this need. Again, it is not something you do once and leave. It should be reviewed regularly, right? Coming back to the next question, which is, does the cover go up? It's usually wise to link your cover to inflation so that it keeps pace with the purchasing power of money. And one would then look at an annual escalation of cover, and your premium then goes up proportionally. Be very careful that sometimes you have a situation where your premiums up front are discounted severely, and one then ends up with having very high annual escalations later in life. and may sometimes become unaffordable.
Because you've got increased responsibilities. The kids are probably in high school, going to university. There might be other costs that you need to take care of.
Correct.
It makes quite a lot of sense. But let's play devil's advocate here just for a moment or two.
Sure.
Why should I go out and purchase some kind of life insurance policy when you could have another savings vehicle on the side, which could maybe meet the needs that you might have once you pass on?
Sure. I do get that a lot. Let's look at the scenario where one has, for example, an outstanding bond of R1 million and other responsibilities. You may have a young family. You putting away a certain amount of money into investment is going to take quite a long time before you actually build up an asset substantial enough to settle debt and to provide for your family. Yet, if you took a few R100, depending again on your age and your risk profile, you could buy yourself a few R1 million cover. And that pays out immediately on the happening of an event. Life cover and investments are both joint partners in your financial plan. So it is important to have your risk covered, because risk is something you cannot control. We don't have a crystal ball, and we don't know when certain things are going to happen to us. And that's where one takes risk cover and is able to then mitigate the impact on your balance sheet. You may have to be in a situation where, you know, if you're disabled and you can't work, it might mean that you need to sell off your house and your cars and things like that just to survive. And this is a harsh reality, but planning properly in advance sees to it that you have these benefits in place.
So it's not a question of one or the other, but maybe potentially both to assist each other, as you mentioned in your financial plan.
Correct.
The big question, is it ever too late to take out life cover? Maybe you reach your 50s, you've never had life cover for the considerable part of your life, and now obviously that pension is abound, and obviously the inevitable might be around the corner. Is it ever too late, and does it impact on your risk profile? Sure.
Look, typically one buys life cover. The best situation is to buy life cover when you're young. It is cheaper. The older you get, the more you're going to pay. So life cover, the cost of life cover is impacted by a few things: your level of education, your current income, and then what sort of occupation you're involved in, what are the risks associated, and then the life insurer is able to give you a premium of how much you would pay for a certain amount of cover. Yes, and it is typically best to take the life cover when you're younger.
Virath, thank you so much for your time today. I think the key takeaway points: get it when you're younger, the options are a lot more wider, and as you mentioned, costs are cheaper, and get a full, thorough analysis. And the options are wide out there, so don't just necessarily take on the first cover that you find.
Correct.
Fantastic. Well, that's it for Personal Finance this evening. Thanks once more to Virath Juggai, risk specialist from Gradidge Mahura Investments. Now, remember that we'd love to hear from you, so you can tweet any of your comments and suggestions to @CNBC Africa using the hashtag Finance410, or to myself @Kukumfupi on Twitter. Until tomorrow evening, it's goodbye for now.